All right. Hey there, everybody. Christopher Inks with Texas West Capital coming at you live here just a few minutes after 11 a.m. Central Standard Time on Tuesday, January 17th, 2023. Can you believe we were already halfway in through the first month of the new year? Anyway, coming at you live here from just north of Houston, Texas. I guess we can say we kind of got NASA right down the road, right? Though I usually skip over NASA and head on down to the beach. But anyway, that's only when we're not on the lake right here. How are y'all doing? Hopefully you guys are doing great. Man, oh man. So, things popping off with crypto here over the last week. Nothing, surprising at all. I've been talking about the idea that we've got this bottoming process going on since last June. The actual lows may be in. So we're going to talk about that today. We're also going to talk about the dollar. Look at maybe some stocks here and tell you what needs to happen there. Because at the end of the day, we're kind of at this crucial point, and we want to figure out, okay, is it just going to be another rejection for stocks, for Bitcoin, stuff like that? Is the dollar going to rally to new highs, or is the bottom in? Is the bottom in crypto? Is the bottom in stocks? Is the top in the dollar? And so we're going to talk about that. But as you guys know, I am on a mission here this year to help 10,000 traders become consistently profitable. So to that end, we've got a few announcements. First one is Fiboswani will be joining the Texas West Capital team. Exciting times. I've been working on kind of ironing this out, I think, for probably the last month or so. But incredible guy. He's got so many years of professional experience out there. And so we're really, really, really excited about welcoming him in to Texas West Capital. All right. So that's exciting. We've got right now, tier 3 is normally $200 a month. But again, in trying to work on with this mission that I've got this year, we've got right now anyway, you can get 1 month of tier 3 access. Normally $200, you can get it for $19.99. And so, yeah, over 300 hours of video educational content, probably 350, 400 hours, probably getting near there at this point. 3 educational live streams a week. We talk about Wyckoff. We talk about price action. We talk about Elliott Wave. We've got like 25 charts that are updated intraday or daily. We do chart requests and chart critiques and so much more. But our community, I think, is probably the coolest thing out there. Anyway, no auto renew on this. You don't have to worry about, listen, I want to try it, but I don't want to have to remember to cancel or anything. It's a month, guys. That's it. I'm not sitting there going to, keep you on that on the auto renew. But if you do decide it is something you like and you might be interested in sticking around longer, we'll have a great deal for you there as well. We've got some people here, kind of tier 3 members and whatnot, talking about what they think about what we do over here. And so, yeah, jump on there. Check it out, guys. We'd love to have you there. That is, let me see here. There's the link there, howtotradetowin.com/T3. And also, if you haven't done it yet, go ahead and join the Market Breakdown, guys. That's my weekly newsletter. We talk about a little bit on the macro, what's going on. Take a look at the bigger charts, usually like the dollar, Bitcoin. We've looked at here the last few weeks. We looked at Ethereum. We've looked at Litecoin. We've looked at the S&P E-minis. We've looked at I can't even think of all of them. The cubes. Quite a few. So we kind of jump over through that. And do that. And by the way, I think I'm going to have another newsletter coming out, guys, having to do just strictly with trading tips, tricks, techniques, stuff like that. And so be on the lookout for that. We'll kind of use it to delve deeper into my threads that I put out every week, just to kind of help you guys become better traders. I mean, that's what it's all about, right? So be on the lookout for that. Let me see here. Who's here already? We got Bamboo. What's up? Mark checking in. Evolution. Yeah, Mark, I know who you are, buddy. Tell your writers here. Data's here. Fiboswani, look at he's here as well. Rank Collector, what's up, man? It's been a while, I think, since you've joined in, hasn't it? Good to see you checking in. Hopefully life's treating you well, man. Let me see here. Sevilla, what's up? Do some alt charts. I usually do. I usually do hit a couple of them, right? We kind of see, people kind of say, okay, we'll take a look at this one. So we generally do. Let me see here. Steven, what's going on, man? Fiboswani, definitely looking forward to getting you in there, man, for sure, for sure. Tell you, Ryder, what's up, man? Sylvia's here. Eric Quinn, always good to see you guys. And 51 ETH. How are y'all doing? Man, it's kind of exciting time. It's hard not to be exciting, right? It's hard not to be excited. We had this big push up. And so with this big push up in crypto, your bigger bearish accounts out there, guys, I'm going to tell you, the bearish accounts, the really bearish big influencer accounts, right? They're no different than the big influencer accounts when they're really bullish at the tops, right? They have trouble letting go, right? They have trouble acknowledging that something different may be happening. Now, there are no guarantees in trading, guys. The only guarantee really is that you're going to lose money while you're trading. At some point, somewhere along the line, you're going to lose money. Period. End of sentence. But that is the biggest guarantee. Really the only guarantee there is in trading. Nobody has ever traded and not lost money, guys. Period. End of sentence. Doesn't matter how good you are. And that's why risk management is so important. That's why I talk about it so much. Because it's there to help you, to keep you from messing yourself up, right? Spiral Architect, what's up, man? Good to see you. So, you guys got to keep that in mind. But we're going to take a look at some ideas here. We're going to look at some different charts and, just to kind of give you an idea, right? I'm not here to convince you. You guys, you need to do whatever you're going to do. I'm here to say, listen, this is what I'm looking at, and this is what this usually means, and this is why. But we still need to see this. And if we don't see this, but see this other thing instead, then that means we're probably likely still in that downtrend. I mean, it's as simple as that. Trading really is simple, guys. It's just not easy. It's not easy because you have to deal with your emotions. You have to deal with the psychological part of it. You have to deal with, I'm going to be honest with you guys. Some of you are about to get real butthurt here with what I'm about to say. But you have to deal with your own laziness. Yeah. People in general tend to be lazy in life. And how you are in life transfers into how you're going to be as a trader. You cannot divorce the two, guys. However you treat life, however you look at life is exactly how you will treat or look at trading. So most people are undisciplined. Most people are not consistent in their life. But these are things that you have to be as a trader to get where you want to go. The good news is it's something that you can choose to change, but you have to make that choice to do it. You have to choose to do it, and then you actually have to take the steps to do it, right? But the cool thing is if you start doing that, you're going to see your trading get better, and you're going to see life get better. Because, again, you can't divorce the two. If you start doing that with trading, it's going to bleed over into your regular life, into the rest of your life, your relationships, your work, your, whatever you're doing. It's going to. So if you want a better, more fulfilling life, start being disciplined and consistent in the things that you do. Figure out what you need to do and then do it. Don't just say, oh, I wish I could do that. You can do it. You just got to do it, right? Let me see here. Your butthurt now, Fibaswani. Hey, Deadly, what's up, man? Good to see you as always. Let me see here. Spar Architect says, he says he 100% agree. I like this quote from Denzel Washington. Dreams without goals are just dreams, and they ultimately fuel disappointment. Goals on the road to achievement cannot be achieved without discipline and consistency. Man, he is a smart man. If he said that, he is a smart man. I'll tell you what. And you know what, guys? I speak here because I've been to these other points in life, guys. I'm not some guy who was just instantly good at trading, instantly had this great life, okay? I had to work on it. I had to put the work in. I had to make that effort. So when I speak about it, it's because I'm speaking from a point that I've already been there. I know what it takes. All you have to do is figure out, you know what? I need to do what he's saying. Just trust in what he's saying and do it. Because if I do it, I mean, what's the worst that could happen? You don't do anything. Life isn't any different, right? Well, heck, if you're going to do something and the worst that happens is life isn't any different, but the upshot to it is life could be so much better, why wouldn't you do it, right? Why wouldn't you do it? Let's see here. Data says, I couldn't get butthurt. I'm too lazy to do anything anyway. It comes in handy when people are busy getting upset and stuff like that. All right, guys. All right. So, hey, listen, here's the FedWatch tool here, We generally tend to look at the CME FedWatch tool. And as you can see, the market is pricing in a 96.2% chance probability of a 25 basis point rate hike coming up here in February, beginning of February. 3.8% chance of a 50 basis point rate hike. Again, this is in line. You guys remember, with what I've been thinking a year ago, January of last year, I was talking about what I expected for last year, right? Again, as a reminder, we were looking at inflation peaking and housing stuff peaking there just prior to the summer, around that time, and then we were looking for the Fed to have aggressive interest rate hikes of 75 basis points at least, maybe 100, starting in the summer, and then I was looking at that potentially ending by the time we got into Q4, right? Now, that would have been like October, and then we were looking for that 25 basis point rate hike that dropped down to it to come around January, right? So I was off, they ended up doing 75 basis point October and November, and then immediately dropped to 50 basis point last month, and now they're looking at 25 basis point this month. So, not too bad for a year out, right? We're still at where I was looking to get at, the 25 basis point rate hike here in January. Question is, this puts us at one more, if we get a 25 basis point rate hike, right? So our current target range right here is 4.25 to 4.5, right? 25 gets us to 4.5 to 4.75, right? So if we get that in February, remember, the target rate for the Fed is like 5%, right? Though, you got little rumblings, we're going to go higher, whatever. They're not going to go higher. But that would mean just 2 hikes of 25 basis point, and then they're done, right? And then I've kind of tossed around the idea maybe we see a pivot, right? Maybe summer at the earliest, right? And so I get this question. If job growth continues to be there, and there's no real recession, and all these things are kind of looking all kind of rosy for the economy, whatever, why would the Fed cut interest rates, right? And I think the argument there is because of deflation. See, you're in a debt-based economy, and you're in a debt-based economy, which means you need inflation, right? You have to have inflation. Otherwise, your debt, if you don't have inflation, your debt stays just as expensive, or if you have deflation, it becomes more expensive to pay. But inflation makes those dollars cheaper, right? And so what that does is when you go to pay your debt as the years go on, it becomes cheaper to pay that debt. You see, this is why this works. This is why this happens, guys. So most economies now are debt-based across the world, right? And so they need that little bit of inflation to keep going because it makes the payment on that debt cheaper as it goes out. So deflation becomes a very, very serious thing for the Fed and other central banks because they're taking on all this debt, and all of a sudden it's going to become more expensive, right? Not just for them, but for everybody, right? So I think, again, the argument for why would the Fed cut rates if everything else is hopping along all rosy and whatever is because deflation. Because if everything's going great and you got this strong dollar out there, it gives it stronger purchasing power, right? So I think that's probably the reason why why they would probably do it if all that was going on, So yeah, we'll see what happens, but so far kind of following what we're expecting. So we'll see how this continues out 6 months from now, right? Dan, good to see you checking in. Andrew Bennett as well. Good to see you guys. Is my astronaut profile pic on Twitter the equivalent to laser eyes? Actually, I was goofing off with AI image stuff, and that was one of the ones that popped up. And we had the big rally up there with crypto, and so I was like, oh hey, moon landing coming. New Twitter pic here. That's really what it was. It was just it was an excuse to use that image. I've got a few other ones on there with Bitcoin bulls and whatnot on there as well. A lot of fun. AI image stuff is fun. So yeah, and I am in Texas, yes, down the street from NASA. So being an astronaut for NASA, that's like my my side job, right? What do they call it? Your side hustle? Not really. Anyway, so yeah, things kind of going as expected. So, guys, I know what I notice is people will stop following me on Twitter or will unsubscribe from the newsletter when I say things that they don't agree with. The problem is most of the people are not very experienced in markets and definitely not in macroeconomics. And so they listen to all the rhetoric going on out there, all the, what the media pushes. And, and they assume that's correct because the media said it, right? Even though they argue that the media is this crappy thing and terrible thing. But, deep down, if the media says it, it feels like, oh, they're right. And so, when you talk differently about it, people tend to move on. And it is what it is. But, again, guys, if you've been following me for, any length of time, a year or more, we're consistently nailing this, right? The best part about being a trader, guys, is that, so many new traders, retail traders, they get in here and they become so concerned with the larger trend that they become paralyzed. They become unable to actually trade, right? So trading is, contrary to what you may think, trading is not something where you put in a buy or a sell and you hold the position for weeks or months on end, right? Trading really is more about that shorter time frame move. And so if you're truly a trader, and that's what I think, most people don't really understand the difference, and they say, oh, I'm a trader, but they're not really a trader, right? But, if you're truly a trader, then the overall trend you don't care because it doesn't really affect you. As a trader, all you're interested in is volatility. That's all you're looking for. It goes up, it goes down, you don't care. You're able to trade it. Investors are worried about the overall longer-term directional trend. Does it make sense? So, I talk about this because this kind of thing can create a lot of cognitive dissonance inside your head, and it makes it really difficult to become consistent with trading or consistently profitable. You have to recognize what's going on so that you can change the way you're thinking so that you don't have that dissonance. And you can then, not be so paralyzed about not doing anything, okay? Let me see here. Fake moon landing. I can use all caps because Hank isn't here. All right. So that's what we're kind of looking at. So let's go ahead and jump in here, guys, see where we're at. So let me see. Let me find a good, bigger chart here. Where is my chart? Well, this is something interesting here. So I posted this on Twitter. And it was just this comparison I'd been talking about for a while, the comparison of what we had here to here, remember? So what your larger accounts were saying was that, this meant that you're going to have this huge move down, right? And, the thing you have to understand about structures are, they rhyme. They don't repeat, okay? And so what we mean is everybody goes out there, and you'll see them, and they'll draw these little bar, they'll copy the bars. They'll say, oh, look, it's supposed to do this. So silly, guys. Don't do that nonsense, okay? Structures are structures, okay? And this is why we teach Wyckoff. So you can understand the anatomy of structure. So you can understand why is it distribution? What happens in distribution? What are we looking for? What does it mean? And then accumulation. What happens in accumulation? What are we looking for? What does it mean? Because I'm going to tell you what, guys. 70 to 80% of your time, price is going to be sideways. Depending on what, whichever time frame you're on, right? So if you don't understand ranges, if you don't understand how to look at them and how to understand them, if you don't understand how to understand them, yeah, that's it. You're going to find yourself, just YOLOing whenever, hoping it does what you want it to do. And that isn't the way to trade, guys. That isn't the way to trade, okay? But I think there's a lot of similarity between these areas here and what we had in here. This is all a bottoming process, okay? This is what I believe to be a bottoming process here as well. I'm telling you right now, if we pop out above that weekly pivot there impulsively and we stay up, and we don't drop back below it, I mean, there's no reason you shouldn't be looking at a new all-time high. There's no reason at all you shouldn't be looking toward that. But that goes with fibs and a certain way of understanding fibs. By the way, guys, if you're interested, we're going to be releasing 2 courses here not too long off. One on moving averages and one on pivots. And so, you know, if those are things that interest you, you might want to be watching for that. We'll give you, we'll let you pre-order, and we'll give you a huge discount for pre-ordering. But yeah, so we've got that coming out there. These, you know, the idea of the moving averages one is to show you multiple, like 50 plus different ways you can use moving averages in your trading. Yeah, most people don't know there's that many. There's at least that many, but we're going to show you all these different strategies and systems that you can do with that. The pivots one is going to be amazing because, as you guys know, I spent a couple years, well, I think you guys know, I spent a couple years trading just pivots back there around the GFC, just prior to 2010, and that's all I traded was pivots, just to learn how to use them effectively, right? And so what I'm going to do in that course, I'm going to transfer everything that I understand about pivots into a way that you guys can digest and use to help you be better traders as well. So lots of stuff going on there, but I'm telling you, man, it looks pretty good at the moment here. Now, what happens is right here, right, we've got this big move up this past week, right? And so your big accounts, your big, really bearish accounts say, oh, no, that's too much. It's too fast. No, it's got to go down, right? It can't possibly go up higher. And so I like to point out right here, what it does, all you're doing is you're just jumping up through that inefficiency. See these big candles down? If you've got big candles, you know, coming down like this, and you pop back up into that, you should get sucked all the way up to that point of breakdown. Look what happened here. Same idea. Because this is what we call an inefficiency, or like I said, what us older traders call a gap, right? It's not gapped like you think of gaps, right? But the fact that price moves so far, so fast without doing any real overlapping and testing of levels, that's why we call it a gap. It's an inefficiency. And when you look in terms of you know, the high volume node here, you can see it's a low volume node. In the VPVR here, it's a low volume node that kind of carries you through that area, right? Because it's just not, the market hasn't shown any real interest in those levels. So if you go through it, it doesn't show much interest in it, then usually you kind of zip up right through it again. So, and in this exactly here also is the fact that, you know, the size, let me see here. I had another chart I wanted to use. Let me see here. Is that the one I wanted? Let's see. So, if we look here, yeah, I can, whatever, I can leave those on. I'm going to go like this. Here we go. So, this is this dragon pattern. I taught this before to our members, and I had one of them kind of mention, hey, where's that dragon pattern here? So I went ahead and drew it up real quick. But yeah, dragon pattern, basically you have your head, you have your leg, you have your second leg, you have your hump, and you have targets based on, you know, the pattern itself, right? And so we've hit the first and second targets here. Continuing to rally up gives us a third target of about, right around 23,900, 24,000 and 26,000 up in there, right? And that kind of aligns here with expectations of this wave 5 up here at around 24.8 on the BLX here. You see that? So, you know, and again, this makes sense because in terms of Elliott wave, 5 waves up off a low should rally to right around the previous swing high. So this gets us right about there, right? Which means locally here, we're looking for this rally on up here toward, maybe toward 22.5 or so here, and then a pullback, and then one more rally up there. You know, and again, these large expanding candle spreads where the candles are very little overlap, they're just kind of boom, 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 riding on top of each other. And that expanding volume at the same time, that's a wave 3. That's usually what we see for a wave 3. You know, and again, you know, when you look at this 1, 2, 3, 4, 5, ABC, right? And then 1, 2, you know, 1, ABC is 2. And so, you know, if this is 1, 2, there's no real pullback along the way here to give us a 3, 4, right? And so that's kind of what we're looking at here, right? You finally get this bigger pullback. Maybe that's your 3, 4, looking for that 5 higher. So there's nothing really here that's shouting that we should be going lower on this at all. Let me see here. Yeah. Let me see what you guys are looking at here. Telluride says, I like pivots a lot, all time frames, didn't use them before joining TWC. Oh, they're so fantastic. You know, two things that traders don't use a whole lot of, but they would be so much better off if they knew how to do them properly. Channels and pivots. Channels and pivots, I'm telling you guys. Let me see here. Hasta la vista, Barbie. Good to see you checking in. Let me see here. Genghis Khan, what's up, man? He says, my portfolio is showing type 1 bearish divergence on the daily time frame. What's going on, man? Yeah. So you've got, you know, with the daily, we've got that continuing to be topped out there, right? Let me see here. Gotta find my charts. Gotta be better putting these charts together here, right? So, yeah, I mean, you've got this flat out on your Stochk RSI, right? Now, here's the thing. Actually, I don't see bearish divergence here on here because, well, first of all, I mean, even if you look here, I mean, I guess if you go way back over here, but you're not going to go way back over here, right? Because this is the point, and then this is the point, and then this is the point, and then now this is the point, right? So your higher highs, and you've got higher highs here as well. This is the daily. And even this here is broken out above this swing high, right? This swing high here was at 21,478.80, and this one got up to 21,595. Now, you know, this is a trade that we've been working on, you know, consistently there daily, multiple times a day there at TWC. If you guys are part of, you know, TWC, you got to see this and you got good targets. And we always had multiple targets, right? Just in case, right? Because what I had talked about, you guys, even here, you might have remembered when we were doing this sideways here, I noted these big inefficiencies here. And I said, if we can take this level out, I said, we're likely just to kind of run like a scalded cat up toward that breakdown. Because again, what I explained with the inefficiencies here, right? And that's exactly what we did. And so now we're kind of, you know, just consolidating here and trying to push up higher. So yeah, I mean, you know, the thing is, this is the same thing that happens pretty much every Bitcoin bottom, right? You get this, because what happens when you take out supply, right? So when you have a bottoming process, you're removing supply from retail's hands, the weak hands, right? These are people that either don't understand what they're doing and they get scared and FOMO and all this stuff, or they're like myself and hopefully like some of y'all, shorter term traders, right? We can't, you know, crypto Twitter is so toxic, guys. Most social media is, but you know, there's always this big shaming thing about weak hands, right? So silly. Again, weak hands are also traders. Weak hands just means somebody who's going to get rid of what they're holding. That's all it means. It doesn't say, oh, because they're idiots or because they're stupid or because they don't know what's going on. That's part of it sometimes, but it's also traders. And so the idea, why does it happen? You're getting rid of your supply because that way, if you're taking that supply off, things like this can happen. And it can continue to push up because those people who are trading shorter term or getting rid of it because they're scared or whatever, they don't have the supply left to meaningfully keep this from rallying. That's what happens with bottoming processes, guys. That's why you often see this kind of thing, right? But your real moves don't come until the breakouts, right? So you can see right here, look at the volume down here. Comparatively pretty low, right? As we were down here. And you always get that, oh, well, there's low volume. How can it possibly rally? Well, because your volume doesn't usually kick in really until you kick out through the top of the range. Again, a lot of this has to do, you know, we explain this a lot with Wyckoff when we describe, when we discuss Wyckoff and we do those Monday training sessions. We explain why this happens here and what you're looking for to make it happen. But yeah, you know, and so these things often rally up without retail, especially down at the bottoms, right? So you have this big, you know, year-long kind of bear thing going on, right? Even though really the bottoming process is likely started over here in June, right? But it made the slightly lower low, so the bear's like, oh, it's definitely going down, right? But what happens here is that they're so bearish, they can't get in and trade. Oh, it's definitely got to go down. And it goes up higher. Oh, well, it went higher than expected, but it's definitely going down. And then it goes up again. Oh, it's still going, but it's definitely going down. I wrote a thread just the other day, guys, on 4 different ways that you can look and to kind of tell if whoever you're getting, you know, advice or whatever from is legitimate or not. And one of those things involves, you know, are they giving you guarantees? Are they speaking in absolutes? Because you know, those of us that are out here trading, for a living, we've come to understand that there are no guarantees or absolutes other than the fact that you're going to lose money as a trader along the way, right? You're not going to get every single trade. So when you've got somebody out there who's speaking in absolutes and guarantees about what price action has to do, guess what, guys? Be very careful, because one, either they know they shouldn't be, but they're doing it because they know that'll make you follow them, and they're just interested in you following them so they can make all the money as an influencer. Or maybe even worse is that they don't understand what I just said, and they really think they can guarantee and they can be absolutes and whatnot. And those are dangerous people to listen to, because they're going to get you losing your money quick, fast, in a hurry. Now, at the end of the day, you're still responsible for your losses, guys. You have to take responsibility. If you don't take responsibility, I wrote a thread on that too, guys, about the importance of taking responsibility and whatnot, right? Because how can you get better? How can you do more if you can't even take responsibility for what you've done? You can't learn. If it's always somebody else's fault, then there's nothing on you to force you to change the bad habits that you have. I know it sucks. It sucks when you can't blame anybody else, right? But that's the same way in life, guys. I talk about this all the time. So, right now we're going to look, right now I'm still thinking we get up here toward this box. And again, that bearish market structure coming from the all-time high, if we break out, this was the last lower high right here at 25,214 and 57 cents here on Coinbase. So whatever that is on whatever exchange you're using, basically it's that mid-August swing high. If we're breaking above that, that breaks that bearish market structure. That breaks the bearish market structure. And it doesn't guarantee that there's a bottom in, but what it says is that bearish market structure, that bearish trend coming off the all-time high is broken. Now you can go up and make, a higher high here and then continue down lower. It just creates a new bearish trend, a larger one, right? Where you have, the all-time highs where you start, and then this is the low, and then you have the lower high, and then you'd have a lower low. But, if you're breaking out above that, the odds start increasing that low is probably in. At least for a bit. You should be able to rally up higher. And I don't think, most retail, I don't think most retail will get in till, 50, 60,000 probably. Well, some of them anyway. I think most of them won't go in. Usually, most of them don't get in until you get to the all-time high again. Because they lost so much money trying to long the drops on the bear that they're like, oh man, the system's against me. Wall Street's stealing my money. Crypto whale stealing my money. Silliness. So yeah, I think it is what it is. And, the only thing that changes anything, guys, really at this point is if we're breaking down below this swing low here. I think if we break down below this 16,273.40 here on Coinbase, I think at that point you go, okay, we'll probably looking lower. Really, as far as the daily pivot goes, as long as we're above the daily pivot, we should be continuing to expect higher highs, right? If we get out above the weekly pivot, as I talked about, up here, right? Right up here around 26.7 or so. If we're getting out about that impulsively, man, there's no reason why you shouldn't be looking right there to the R1. And then this R2 pivot up here near the swing high. It's a simple targeting thing. But again, huge weekly candle last week. A lot of volume coming on it. And so now we just need to make it through this bit. By the way, you'll notice where our targets are here. The target gets us right below the pivot, right? And so, again, the idea is 1, 2, 3, 4, 5 up there, right? So we go 1, 2, 3. And so that 3, which is usually the largest and strongest wave, right? Because of market psychology, which we cover in the Elliott Wave weekly series, right? That we do for tier 3. We'll get you all that explanation in there. But that's what should be breaking out through the pivot there. And so you should get 5 up to the R1 and then pull back to the pivot and then go up higher. So yeah, I don't see anything on here that's overtly bearish right now. Everybody's going to tell you, oh, but look, you got to watch out for this. And oh, man, oh my God, I saw just recently, can't remember who it was. I think they were drawing something like this, I think. And I was like, really? And they were like, oh yeah, look, this is where we are, with what's going on, kind of thing here, right? And my first thought is, well, first of all, that's just a line. That's not significant, right? You can draw lines all day. I think Peter Brandt recently tweeted about how you can give a gorilla, a pencil and paper and eventually draw a line that actually works, right? Just because you can draw a line doesn't mean it's significant, guys. In this case, look what happens on every time here. We break out above all of them. So you're drawing that line, well, shoot. Seems like it's saying that we're going to break out above it and head up, right? But don't mistake drawing lines for, importance, guys. Just because you can draw a line doesn't mean that it means anything. All right? Let me kind of catch up with you guys here. Let me see. Name Mr. Wolfs, what's up, man? Live in the UK and found out last weekend that my bank will no longer allow me to buy crypto using my debit card, which is my own money. I understand the bank's not allowing customers to buy using a credit card, but not a debit card. Having looked into this further, it turns out that nearly 50% of UK banks have banned crypto purchases. I need to be DCAing in now, too. Man, that is crazy. Yeah, I mean, isn't that awful? Isn't that awful? It's not against the law to buy crypto, right? But yet they're going to make it so you can't. Tell me how. See, this is why people have problems with governments, right? You do stupid stuff like this. But they're going to let you. I don't know about you guys over there, but I know over here, the government, the state governments and everything push lotto, right? Scratch off tickets, lotteries. Are you kidding me? And yet you're going to have issue with somebody, being a bit more, putting it into something they actually have a chance with, right? If they do it properly, right? Like there's like nothing you can do to increase your odds really of being a big winner on a drawing or on a scratch off, right? I mean, really, there's nothing you can do to affect it. It's all chance, right? But trading isn't chance. And yet trading or buying Bitcoin or whatever like that, they don't want you to. Isn't that crazy? Oh man, it's so stupid. It ticks me off. Let me see here. What's going on, Brian? Good to see you checking in. Telluride says, I tell everyone to ditch their bank and find a local credit union where you're a person, not account number. I agree 100,000% with that. One of the best things, hopefully you learn in life is to, get with the credit unions, the local credit unions, for that exact reason. If you want a loan, all of a sudden it's not just what's on the paper. It's not just your credit score, but it's also they know you, right? So as long as you're a good guy and you're paying things on time and doing everything, you actually, it can affect your ability positively to get a loan, for instance, right? Or to do other things. These big banks, they don't care. Like Telluride said, it's just a number. Smaller credit unions, definitely the way to go. Definitely the way to go, guys. Genghis, you meant hidden bearish divergence and Ethereum is the largest position in your portfolio? You don't hold any Bitcoin? Okay. Fiboswani says you hear absolutes. Absolutely run. Aeroquin said a guy named Il Capo on Twitter is exactly as you described, always saying it's going lower and speaking in absolutes. He has almost 1 million followers. He's missed a lot of them. It's really sad retail gets caught up in those influencers. Yeah, and I didn't even know who that was. Guys, those of you that know me, I've never really spent much time on social media, right? Which is why we've got the big marketing push this year and being a lot more aggressive about it. But, I don't know a lot of these accounts, right? And somebody mentioned it the other day, so I checked it out and I was like, oh, yeah. Again, on the one hand, you do have to be responsible for your own trades, guys. You're the only one taking those trades. If you choose to listen to somebody, that's on you. Okay? That is 100% on you. That said, if you're out there and you've got 1 million people following you and you're consistently wrong and you're not giving them if you're purposely speaking in a way that makes people who don't know think that what you're saying is true, and that's why you're speaking in that way, obviously you're trying to create that belief, right? I mean, you're out there trying to make people believe that what you're saying is true. You know, just shy of that is you talk real big because you believe it's true. You're not necessarily trying to get people to believe something that you know isn't true. You know, and so there's so many levels to it. But again, guys, you know, you got to be careful what you're following out there, right? It's just, you've got to be responsible for your trades, period, end of sentence, guys. No two ways about it, right? Name Mr. Woke says, it's like living in China. I'm okay to use a gambling website, though. Vivaswani says, social media is a cesspool of crazy so-called traders. I say just ask them questions, and if they cannot answer, then simply leave. Yeah. You know, you guys, sometimes I've been wrong, right? But I've always given you levels, right? So I don't speak in absolutes. I say, listen, I think it's going to do this, and this is why, right? And then I say, okay, so what we need is we need to move through this level toward this target. And that'll increase the odds that it's likely, right? And then I say, but if it doesn't do that, and it does this other thing, goes past this other lower level instead, then that means it's likely not happening, right? So you always know, you know, first of all, you don't jump in, or you shouldn't be jumping in ever thinking, oh my God, it's definitely going to do whatever he's saying it's going to do, because I always tell you not to think that way, right? Which is why I give you then the other side of it, right? And I think once you can learn to do that, I think you just find so much more profit, so much more consistency in trading, because you understand that, listen, I think it's going to do this because of these things. So you've got your narrative, but you also understand at what point your validation level, you know, at what point does it become much more validated, right? At what point, going the other way, does it invalidate what you're saying? And when it does, what targets are you looking to the downside? In that way, you can go ahead and have targets going the other way. You don't have to just sit around and go, okay, we'll have to wait till the next long. Right? Or if you're going short, I have to wait till the next short. Right? But you don't see that much. You don't see that often. You see people are like very one directional. It's going to do this, that's it. If you're lucky, they might say, okay, well, if it does this other thing, then get out. But man, if you want to make money in trading again is not, it's not that big trend thing, right? It's local. You should be trading up and down. Now, whatever time frame you're on, you will have the most success if you trade in the direction of the trend, until you can't anymore, right? Let me see here. Darren, what's up, man? He says, I like to post LA Wave charts on eToro.social trading platform. People start screaming, stupid chart. Or one I had the other day, nat gas is going below zero like oil 2 years ago. Buy singles, thanks. Oh, man, I have, you know, guys, again, those of you that know me, I'm not real big on small talk. I'm not real big, you know, just because I've got so much other stuff going on. So social media is often difficult for me because so many people get out there and they kind of drag you into the nonsense. And, you know, and I'm out there trying to say, listen, this is why. This is really what's up, right? And they just kind of beat you down with this cluelessness in what they're doing, right? It's tough. It can be tough. So, but I try. Excelsior, what's up, man? Good to see you. Fibaswani says, discernment is key in trading as well as in life. Agreed. Sixer, what's up, man? It says, cautiously optimistic. That's a great way to put it. Yeah. And see, and here's the thing. If you don't have the experience of somebody else who's maybe been trading for, 20, 30, 50 years, whatever, it's going to be really difficult a lot of times for you to understand when they're talking about signals, because you might look at it and go, well, I don't know, it doesn't look as bullish as what you're saying, right? But it's just something about going through various market cycles where you begin to understand more often than not what's likely happening. Guys, you're never going to be 100% correct. I don't care how long you've been doing this. I don't care, whatever you're doing. You're never going to be 100%. Again, risk management is so important. Kimasabi, what's up, man? You said you have 3 as potentially incomplete as long as it's still closing higher highs and higher lows. Yeah, exactly what I'm looking for. A little bit higher up as I talked about earlier. Sure. Slavici, you're looking for 22? Yeah, 22 again. Where did I have mine here? Was it this one? Yeah, I've got a target. So I'm kind of looking at this, and I looked and said, okay, well, maybe we were kind of looking at maybe there was a triangle going on here for 4. And then we got this, and then it's, 5 waves down. And so what I think we have is, this is all wave 4. So this is A, and then this all is B. So this is A of B, and this is A, B, C, D, E. So this is A of B. You've got triangle for B of B, and then you have C, right? And then you have 1, 2, 3, 4, 5, C. So you get this flat correction, but it stops about 61.8% of wave A. So that would make it a running flat. So the idea is we've got a flat here. There we go. And we may be printing an ending diagonal here. My targets are 22,219 and 22,544. Those are my potential wave 5 of 3 targets there. Now, where is that 3 coming off? But it could stop shorter than that. It could stop toward the range here, just because it looks like it may be potentially doing a ending diagonal here. If we zoom back here, where does that mean in terms of my trade here? So on that other chart, I was showing you the 1, 2 here, and I said there's nothing really happening until here, right? So that's my 1, 2, 3, 4 gets us a 5 for our 1, 2, 3. 4 should come on back down here, and then 5 should potentially rally up maybe as high up here as 24,780. Basically, 24,500 to 25,000 kind of areas where I'm kind of looking for that wave 5. And then that would give us one wave up and pull back in wave 2, right? So, I mean, that's kind of what I'm looking for here. You know, we've snapped through impulsively through some areas of resistance that were important. And so, yeah, you know, right now we've kind of pulled back to the 15-minute pivot locally here. So we'll see if we can get that rally off it and kind of head on up there. But here on the 4-hour, we've reset down and oversold on Stochk RSI. RSI itself is pulling back, threatening to dip back out of overbought. But still very, you know, with RSI up here, shows still strength, you know, in that rally. Now, there is this bit of bearish divergence here, right? But it's not this whole thing. It's from one peak to the next, right? So it's just one peak for the next as long as it remains lower than, right? So if you get a rally and it breaks out of that previous peak, well, then, you know, you're looking for it to continue higher there. No more bearish divergence, right? Let me see here. Darren, have a great day, bud. Econometrics. Oh, I'm such not a fan of econometrics. I'm not a fan of math-based economics. I'm really not. I see that as something that governments really have really kind of pushed because it gives them numbers that they can then input into their social planning, their central planning. You know, I come from my school of thought as far as economics comes from, you know, a lot from Mises and you know, that kind of thought process, their Austrian economics. I don't think we're going to get to that point where it runs rampant everywhere or whatever, but the understanding between what's actually going on, you know, economics is the agreement between two people, right? That's what it is. It's not numbers. So yeah, I'm not a fan of econometrics. Esteban, good to see you, man. Eric, don't worry about your spelling, man. It's all good. Anyway, guys, yeah, so let me see here. So that's what we're kind of looking at there. What other charts I got? I've got total here, guys. So another thing we're looking at, I saw somebody mentioning this, and they thought it was going to continue down lower. I think locally, I think there's a big argument to be made here. It looks like we've got 5 up here and 3 back. And so again, kind of like what we're looking at Bitcoin, right? 1, 2, making a 3. So I think we continue potentially up higher here, getting up here toward this, you know, and you get 5 waves up that ends up right around where the swing high was. Same thing we're looking at with Bitcoin, right? It comes out the same kind of way there. So, you know, this is the crypto market cap excluding Bitcoin here, so total 2. Yeah, you guys can see that. Total 2 up there. But yeah, you know, and you've got this huge channel here, the EQ. You know, when it comes to channels, I'm most interested in the EQ, and look at how the EQ works as resistance support here. So again, you know, you get this rally up, you get the pullback, and then you should break out impulsively. That'll carry it above the weekly pivot. You should rally up into the pivot, into the channel resistance, pull back to that weekly pivot probably, and then break out higher on that. So I mean, to me, you know, if I'm looking at this, I mean, to me, it looks like there's a good chance that we're done with the correction. Here we go up. But, you know, again, still looking for that breakout, same area here, that 25,214 and 57 cent area on Coinbase, that mid-August swing high. Same thing here. We still want to get above that. That breaks that, high, low, lower high, lower low, lower high. So it breaks that bearish structure there to head up. Ahmed, what's going on, man? He says, I think this is not a wave one and become a start of something. Therefore, I think this is a C wave, which is ending something. If you look at daily time frame, you can see it. I mean, it's always possible. It's always possible. But I think, again, the way I, continue to talk about it there. Let me kind of get back over here. I think you're talking about this, right? You're talking about maybe like a A, B, C kind of thing. Yeah, it's possible. I mean, there are no guarantees, right? But the structure so far continues to, I think, favor that a bottom's here. And again, I look not just at Elliott wave, I also look at Wyckoff, right? Via the range here and understanding what I do about how bottoms generally form. I think there's a great argument here that this is accumulation in this area here. This right here is just a terminal shakeout based on the volume and price action, give you the range which you expect, and then you get the breakout back up into the other range, into the larger, more dominant range. So yeah, we'll see what happens. Definitely not saying, listen, you just go long here and you don't worry about it. As I said, right here with this rally up, if we're kind of dropping below this swing low over here, this wave two, I mean, at that point, even though it's still above the swing low, I think if you get to that point, you should definitely be looking at likely lower. As far as pivots go, as long as you're above the daily pivot, you should continue to look up. Overall, if you drop below the daily pivot, at that point, then it becomes more likely that you're probably headed down. Yeah. You think a huge expanded flat is playing out? The way we finished at 15.5 from pivoting at 25.2 is in three waves. Oh, but look at this. Is it? Are you sure? Because if we look at it, we've got ABC is 1, 2, ABC is 3, 4 is a triangle, and then ABC is 5. See the count? So, I mean, this gives us 5 waves down rather than 3. I'm going to be honest. This is a tough area. And I'm not guaranteeing that this count is correct. This is a really tough area, guys. And you could very well be correct at 3 down. We've looked at that. But if this is going to be an expanded flat, I think you mean like ABC, ABC, and then 5 up, right? So in that case, 1, 2, 3, 4, 5 gets us here, but that still is an expanded flat, right? Because you've got the drop below, right? So you've got A, you've got the drop below for B, below A. Well, then expanded flat should be bringing out higher here. So if this were to be an expanded flat, I would expect a rally up into this supply cluster up here, closer to that 30,000 area. And maybe you're looking at that too. Yeah, if that was to be, that's what I would look at for sure. So, but yeah, I mean, I could see that possibly. And again, it's because this is just really crappy price action here, guys. We've talked about this so many times coming in, right? Yeah. Let me see if I can kind of zoom in here a little bit. But yeah, again, the idea being that you get this, ABC or WXY here, right? To give you 1, 2. And then you have A, B, C is 3. And, potentially a triangle is 4, or even ABC here is 4, right? ABC, right? Because this is a lower low, right? This is the low, not this over here. So you've got a lower low that comes down in just basically 3 waves here. I think I've still got it as a triangle, but I think it's probably an ABC coming down, right? So, I mean, how do you, if you're looking at that as a large flat, how do you make sense of 3 waves down right here? Right? Because this should be, ABC up, ABC down, right? So, yeah. But I think, I think if you are right on that, yeah. I think we go up to 30,000 because again, if it's expanded flat, you expect a breakdown for wave B below where wave A starts, and then you look for a breakout above where wave A ends for wave C to end. Yeah. A triangle where? You count it as a triangle? What part do you count as a triangle? I'm trying to figure out where you're counting as a triangle here. Not here, obviously. Here? A, B, but it's only C there, though. Yeah, it's really hard. Yeah, I get it. I'm just trying to figure out where you're looking at. I'm not the guy that's going to get on here and just tell you you're an idiot or anything like people try and do online, right? I've never been that way. I want to understand what you're seeing, right? Because to me, it's, again, guys, I always say as traders, you have to ask yourself, do you want to be correct or do you want to be profitable? I guess you want to be profitable or do you want to be right? And all that means is, in order to be profitable, you often have to give up the thing that you think is happening soon enough so that you understand it's not and get in the right way, right? But so many people, when they come in, trading, they want to hold on to whatever they think is going to happen until the bitter end, right? But that's not going to get you anywhere as a trader. So for me, I say, listen, this is what I'm looking at. This is what I think's going on. But I'm always open to hearing other ideas to kind of flesh it out and see, okay, is that really look like what we're doing here? Or is there something I'm missing, or is there something the other person's maybe missing? Yeah. So, yeah. I mean, again, I guess, yeah, I mean, I'd have to figure out where that triangle is. But, at the end of the day, this is 1, 2, and then 1, 2, 3 here, right? So you go 1, 2, 3, 1, 2, 2, 3. And so then you come out, you kind of back into it here. Potentially is what may be going on there, right? So again, you can get this whole idea that you do like 1, 2, 3, 4 is a triangle, 5 gives you A, B, C, right? It's just the count here is just so rough, guys. There's nothing fun about this. If you're an Elliott wave and you're struggling in this area, understand everybody is. It's just a really ugly area to try and count with what's going down here. Yeah. I mean, you potentially be 1, 2, or A, B, and then 1, 2, 3, 4, 5, right? So it gives you A, B, C. A, B, coming down, A, B, C here, coming up, and then A, B, C. This kind of small area right here, A, B, C. So yeah, definitely a lot of just in that area. It's not fun. But the good thing is, as I always say, right? It doesn't matter if the bottom is in right now or if a flat's playing out, because in either case you should be looking toward that 30,000 area, right? If we're breaking out above 25, 214, right? So that's, again, as traders, guys, you don't have to know for sure that the bottom's in or top's or something. You're trading shorter term, right? And so even if the bottom isn't in and a flat's playing out, the idea is price should still continue higher toward those target areas. So yeah, just don't buy in with it has to absolutely be this or that. You can think it is one or the other, but here's the thing. If the bottom is in and it rallies to that target, then on the pullback, you're going to know, right? When it gets to the pullback and goes up, and you're going to know. If the bottom is not in and you get that pullback and then it continues out, you're going to know, right? So you don't have to be married to, definitives. Oh, the bottom's definitely in or not. If you're trading, right? Trading is about making money, shorter term. Yeah. Ugly areas often mark tops and bottoms. Accumulation and distribution ranges are meant to confuse. Yeah, you're getting, because you get a lot of that overlapping price action. Sure. Consume time by corrective wave. I'm not a big fan of that idea. This idea that, that wave 2 or wave 4 needs to be so much time. What I look for is more geometry in those pullbacks, that they make sense together. You know that like okay, so for like here, I talked about this being a 1-2 and the idea that we were rallying up here, right? Let me get to a little bit larger time frame. There was no real significant pullback. This is 11 days, right? I'm so 11 days. I'm looking for a pullback for the wave 4, right? 1, 2, 3, 4, to be, you know, I'm looking for 3 to 4 days on that pullback. Minimum's got to be 2, but you know, when I'm looking at it, for me to be comfortable with it, right? But it's the idea. You got 11 days here, and nothing was even a day on that pullback coming up. So that's why I kept saying wave 3 is still in progress. And then, of course, you look at the volume and the price action, the candlesticks, right? Wave 3 there, sure. Let me see here. Also, the question becomes, you know, at the top here, you know, how do you count it, right? Is this ABC down, ABC up, and 5 down? Or is this 5 up and then ABC down? Or is this WXY down, right? I mean, think about it. You know, ABC gives you W, right? ABC, well, ABC could give you W, and then you got X, then you have ABC as Y, right? I mean, just a quick kind of throw in there, right? Could still be a 3-wave move down. But if we're looking at this as being 1-2, which we should, the idea that maybe this is a flat playing out here, so, you know, 3 down, 3 up, and then 5 down, well, it hasn't broken down into wave 1, so it's definitely plausible, right? At least because it doesn't violate the rules, right? It's just a deep wave 4. But here's the great thing. Here's what I like about all this. If this is like, say, this is 3, in the big count off the beginning, right? If this is 3 and this is 4, and then we have 1, 2, 3, 4, 5, it's very well possible this is 1, 2 of 5. And that's the scenario in which we see Bitcoin continue to rally for a few years, right? If this, however, is 3 and 4, and the 5th wave's coming up, then we probably top out, you know, this year in some kind of blow-off top, right? So, you know, again, open to either one. If we're getting this rally and breaking out here, I mean, those are my 2 general ways I'm looking at it, and I don't have to know which one is correct right now, because if either one of them, we're going to break out to a new all-time high. There's a lot of money to be made along the way. You don't have to know which one it's going to do. But if we jump over here to, let's say, the E-minis, right? If this is a grand super cycle top, where the hell is the blow-off? Where's the blow-off top? It's a rollover. All we did was roll over. And so, you know, again, if we're talking Elliott wave and we're talking about grand super cycle, then market psychology, right? Wave psychology says that there should be over exuberance at the top. There should be a blow-off top, right? Because of the level, because of it being a grand super cycle, right? Then, you know, generally, you know, on the lower wave count, you know, like if you go to minor or something like that, right? Your largest waves in stocks, in equities, tend to come in the 3rd wave. That's when everybody goes, oh God, I'm in the wrong way, I got to go up, right? I jump on the 3rd wave. But when you're getting above that, when you're getting to super cycle, grand super cycle, stuff like that, then the euphoria is so great because you're talking about a 5th wave of a 5th wave of a 5th wave, that most of your volume and your strongest push usually comes in that 5th wave, and it leads to a blow-off top. But we didn't see that here. And those of you who've been following me a while, you know that's why where I was originally looking for this to be a top, as we were coming down, I was like, well, I don't know. Because we didn't get that blow-off top. And so now we're looking at the possibility that we've got a leading diagonal coming off the top, ABC up, and then 1, 2, 3, 4, 5, C here. Remember, the Dow has already broken above its mid-August swing high. If the S&P and NASDAQ do the same, they're confirming that breakout higher. This becomes 3 waves down. That's corrective. If this is corrective, we should eventually expect to see a new all-time high. And again, it comes down to is this 1, 2 of 5, which leads to a few more years of rally before we get that blow-off top? Or is this 3, 4, and then this is 5 going up and we get a blow-off top this year, and then everybody's miserable in some 1930-esque depression type thing? See what I'm saying? So yeah, that's kind of just different ways. I'm looking, when I look at the overall larger framework, right? These are the things that I'm looking at, that none of which guarantees that we have to do an all-time high, but these are things we generally expect to see. And if we're not seeing them, then we should become suspect, right? Because trading is all about things happening as we tend to trade those things that happen as we normally expect them to. The things that, continue to happen, right? So right now I'm looking for this breakout above this wave B here to confirm this as 3 waves down as corrective. Now again, as I've talked about before, that doesn't mean we can't get 3 up and then 5 back down as some sort of flat correction that takes all year or something, right? That doesn't mean we can't get a triangle going here, right? If this is wave 4, A, B, C, D, E, and then breakout, right? Those things are still possible. But if this is 3 waves down, then we should be seeing a new all-time high. So the only way, let me see here. No, we should generally expect to see an all-time high. Don't talk about truncations. Truncations are so extremely rare. A lot of people out there try to put them on as soon as possible. But, if there's a truncation, it's going to be pretty doggone rare. And as I taught in our EW, our Elliott wave sessions for Tier 3, there are certain things that you look for in a truncation in terms of price action and volume and stuff that you should be seeing to give you the likelihood that it is, and not just, a stop before pushing up higher, different count or something. So yeah. Let me see here. The $600 silver forecast that you posted about, would that happen post-bus or during the melt-up and then drop to the sub-10 range, or are those two different scenarios? Yeah. If we... The sub-10 range was the idea... was that idea that I was looking, gold potentially below 1,000, printing a large flat correction from 2011 swing high, right? And then, of course, silver moving with it in the count that I gave there. But again, as always, that was been my thing. And it's paid off well over the last few years, understanding that, right? But now we get to the point, the last few months here, where we start questioning it because the price action isn't exactly doing what we would expect. And so we're open to the idea that maybe it doesn't and it goes up instead. And so if it goes up instead, generally, I don't have time to really go into it. It's already 12:15. But there is a scenario in which we could see the dollar rally and gold and silver rally and stuff like that at the same time. But generally, that doesn't happen. Generally, we expect to see the dollar falling in value we see them kind of moving differently, right? So the dollar weakens, and then we generally see, because the dollar weakens, money goes elsewhere. So it goes into risk assets, it goes into gold, it goes into silver, stuff like that, right? If you want to flesh that out a bit more, if the dollar's falling because inflation is rising, so the value of the dollar is less, well, again, the idea is, okay, we're going to move money from that into what you consider a store of value, which most people say is, gold or silver or something like that. But yeah, so the other scenario, the one where we could potentially see some strong big rally up, that would be based on people fleeing the dollar, basically. So something pretty intense happening with the dollar would lead up to maybe something like that. Now, again, as I marked on that's it's a 40-year cup and handle kind of thing, and generally when you're looking at multi-decade patterns, they often don't work out quite to the extent that you expect. So that's something else to keep in mind. But post it because, hey, looking at it, it's hard to display. And you guys know I hate head and shoulders and cup and handle patterns because they're so easy to identify, right? But there's a lot of possibility in that. So based on the size of that cup there, the target would be pretty big there. Yeah. Look at the massive divergence in the Dow Jones. Let me see here. Guys, by the way, is this throwing you guys off here? Remember you used to go here on TradingView and you used to go, load a previous chart or something? And now they don't have that, and you got to go over here to all my layouts now. It drives me nuts. Just wondering if you guys noticed that as well. Let me go and look at this. Here we go. We'll look at the 12-month here. So yeah. So you've got bearish divergence here, right? Which is here. But you don't have bearish divergence from here all the way here, right? It's from here to here, really, because you got the higher high, got the lower high here, and then it's from here to here, because again, higher highs, lower highs, and then there's no divergence here because it's higher highs. And then you get over here and you go, okay, well, here's the high up here. As we get toward, as we rally up to this over here, right? So again, you're looking at that same thing. And so you had this bearish divergence between this point and this point here, right? Let me kind of mark this real quick here. There we go. And so what do we have here now? So we're looking right here. I'll get rid of that now. I mean, we've got a higher high. So we've got potentially some bearish divergence, but look what we had here on that. We have the breakdown. And that breakdown retested the wedge resistance as support, and we're looking to break out higher, right? Remember, this is that mid-August swing high. Again, the idea that we got 1, 2, 3, 4, 5 over here, and then 1, 2, 3, 4, 5. So A, B, C. We've broken out above that. And I would suggest, okay, well, maybe this is 1, and maybe this is some large flat correction. But if we look here, 1, 2, 3, 4, 5. I mean, it seems pretty clear. The rally here, again, potentially a wave 1 up, right? Or, yeah, I mean, potentially a wave 1 up here, going for that rally up higher. But, I mean, the important thing here is, it looks like we've got 5 here, and it looks like we've got 5 here. And so breaking out above that ABC here locks that in as 5 waves, right? I mean, you can't go... let me think here. I mean, you trying to find another way to look at this. I mean, you can't go 1, 2, and then 1, 2, 3, 4, 5, because wave 3 can't be a diagonal. Wave 3 has to be motive, right? I mean, it has to be, you can't have that overlap, right? Which you clearly have here. I mean, so, I mean, you can look at... I mean, and if you look at this rally here, this is 1, 2, 3, 4, 5. So I've got this as a 1, and then a flat, and then a 3, and a 4, and a 5. So it's a leading diagonal, ABC, and then again, 1, 2, 3, 4, 5, pretty open right there, right? The divergence is in the monthly, whoops, time frame. So if we look at the monthly, I appreciate you letting me know that, yeah, you did say monthly. I missed that. So again, your divergence is here, right? It's here, which leads to this pullback. And then you get this rally up higher, and there's actually no divergence there, right? And then it drops down, and then you have, your high, your pullback, and then your higher high up here, right? And then here you have divergence. You make the slightly higher highs here, boom, 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 and you make the lower highs here. And so then you have your response right here. But this right here is not divergence because you're skipping over the higher highs in between, which are already being acted on in these responses here. See what I'm saying? So, yeah, so when I teach divergences, I teach it with this kind of, you've got to really pay attention to where that divergence begins and ends. Yes, this is higher. Yes, this is lower. Yes, this is higher here. But this whole thing is not divergence, right? Your divergence, again, is this area right here. It goes from peak to peak, or trough to trough if you're looking at the other way, right? You can't just skip over some and go, oh, well, it has to go there, because you're messing with what the divergence is, right? Does that make sense? What if, what is a massive flat? This right here? I mean, yeah, that's what I was saying. This could be, you know, that's what I was saying on the E-minis. Could be ABC down, ABC, or maybe I said it, yeah, no, I said it on the E-minis, right? Could be ABC down, ABC up, and then 5 more down, yeah. Spend the rest of the year. Remember, that's where I said spend the rest of the year sideways? Or it could even be a triangle. If this is going to be a wave 4, you know, ABC down could be a triangle, right? So A, ABC up is B, C, D, E, right? Definitely could still be. Sure, sure. This right here, I'm pretty sure I called it when it, you know, before it happened, almost hit my exact target. But, you know, this is, you know, that inverse symmetrical triangle, right? Megaphone pattern. A, B, C, D, E, right? So this is a wave 4 here, which again then makes this the idea that that maybe this is a 1 and a 2, then we get a 3, 4, 5 to finish out that wave 5. So when I look at the Dow, this, you know, this is pretty clear to me, you know, a 3 and a 4. But the lack of a blow off top, if this is a grand super cycle top, you know, from 200 plus years back, 230 some years back, then we should see some kind of blow off top. But instead we just have this overlap. So that doesn't gel with what we would normally expect in that situation, which keeps me suspect on me. So right now, this is what I'm looking at. It really comes down to this. If we drop down below the swing low, then it suggests this is a top. If we break out above the top, well, I mean, even right here, we broke out above what we needed, which was right here, which adds confidence to the idea that this is a bottom and we're heading up. By the way, notice on the monthly, it's not bullish engulfing because it doesn't actually open below where the last month, where September closed, right? But that is a huge bullish candle. You know, that's larger than the previous month's entire spread there, right? It didn't spread in the candle totally, right? And so that's huge, coming off a low, right? So those kind of big candles tend to lead to new all-time highs, right? Right? The COVID crash is the C wave of a flat, and we finished the wave 5 in December 2021. The COVID crush is the C wave of a flat? Nah. You know, I don't think so. Again, you know, to me, A, B, C, D, E, right? I mean, if we look right here, this is an ABC. So how is this a flat? This is an ABC. This is an ABC. This is an ABC. Then it becomes an ABC. And then 1, 2, 3, 4, 5 get you down here. Oh, I mean, I'm sorry, ABC. I was thinking of your flat. But I mean, if this right here is going to be a flat, then you're talking this would be 3, and this is A, this is B, this is C. Well, how do you account for the ABC right here? You see what I'm saying? Oh, I don't have the Grand Supercycle chart on me at the moment here. I'll see if I can find it and post it. I think I've posted it before on Twitter. If you go to my Twitter profile, TX West Capital, and look up Grand Supercycle, I think I might have posted down there at some point. I know I've talked about it on here multiple times. I've shown the chart. I've got it here somewhere. I just don't remember which chart it is at the moment. And I've got to get going here in a minute. But definitely look it up on there. I think I posted it. So it should be there. But yeah, again, if you think this is a flat here, you have to account for the A, B, C here, right? you have to account for this A, B, C, and then following it, this A, B, C here. This is ABC. This is ABC. I agree with you that. This is pretty clearly ABC here as well, which wouldn't work with the flat because it's got to be 5 waves down for a flat, right? But your second wave is right here. You know, A, B, C. See? So, yeah, I mean, you know, to me, this is quite, you know, quite clearly here, this megaphone pattern. Like that. But, yeah. No worries, man. No, I appreciate you speaking about it, man. And I appreciate that you know, that you're not getting all offended because I don't necessarily agree. I really appreciate that. Because for me, you know, it's again, it's talking through it, right? Maybe I missed something here, you know, but I've counted through this so many times, and all I see are ABCs here. And so if it is, then, you know, again, you know, it seems this right here. But I think in either case, we agree that this is 4 down here, right? And this, see, this is where I'm looking for that blow off, right? The idea that you start way back 1700s, right? Way back at the start of, well, heck, you can go back further than that, right? As you're looking back, right? And so the idea, I think, if I remember my count right, I think I was looking at maybe like, I have to go look. I don't want to misspeak here. Yeah, look for it on my Twitter feed there, and I'll see if I can find it and post it as soon as I get a chance. Yeah, you think that is a way for regardless, right? Yeah. So see, here's the best part about this is we don't have to agree about what's going on here. We both agree this is likely 4, which makes this was supposedly 5, but again, we didn't get a blow off top, right? So yeah, you know. And again, you know, we look, this is a giant flat right here, right? This march of, you know, right here rallying up into the dot-com bubble, right? Boom, 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 and then takes off, right? Then, of course, you've got this sideways right here from the 60s into 80, going through the 70s there, right? This has 2 different ways you can count it. Not really too worried about it. And then, of course, you have this big kind of blow off, this rally into a blow off here leading into the Great Depression, right? So this is kind of something I would expect to see now. The idea that I think, okay, I might misspeak here, but I think with my count, I think I was looking at the idea that this is a 1, 2, and then we get the 3, 4, and then we get the 5. So the Grand Super Cycle 3, followed by a Depression-esque 4, into overall a 5th. So yeah. Let me see here. So, what's going on, Fibaswini? Back to meetings. Okay, man. Have a great day, buddy. So yeah, let me see here. I thought with divergences you could go from point to point and ignore things in the middle. If you want to do it correctly, if you want to be right most often when you're looking at it, you go from point to point. So you have to have a corresponding high in price and a corresponding high in the RSI or whatever oscillator you're using, or a corresponding low in price with a low in the oscillator. But you want to go from one to the next. Yeah, you don't want to try and skip over it. Now, for what we're doing with my system, with the mentor program, as I mentioned at the time, we look at the divergence a little more loosely with that because of the way the system works. So, yeah, but if you're trying to do divergences, you know, where you have the most likelihood of getting them correct, you want to go from point to point. Yeah, from peak to peak or trough to trough on that. Let me see here. So yeah, oh man, I got to get out of here. Real quick here, guys. Wanted to talk about Sol real quick. Man, I got so much laughter down here when I said we were looking at this move. But here we go, guys. We got this great move. Sala's off here about, so far has reached 200 and got almost 215% off this low here a few weeks back at the end of December. Crazy, right? I went on the Wendy O show right here, right? God, it might have been right down here at the bottom. And I was talking about those higher targets up into 20s and everything. And, oh, man, I got a lot of flack from that. But anyway, yeah, so we're looking for an impulsive breakout above this descending resistance. If we get that, we should be targeting up here toward that that weekly pivot. Maybe not right up to it exactly, but pretty close to it, right? 50, 60 area. And again, they'd be looking for a pullback and then a breakout on that. And then people always like, oh, but, you know, SAM and FTX and whatever. I don't care. You know, because you're trying to assume what's going to happen with price action based on what you think should happen, based on what you know about what happened with the, you know, with FTX and all that. It's the same thing with GBTC, right? Remember I talked about it going up here, right? Here we go. Trying to get all this down. Okay, here we go. Again, you know, we were talking about watching the lows down here. And everybody's like, oh no, it's going to die off and they're going to sell off all that Bitcoin and oh, the market's going to crash. And I kept talking about how it's worth more, the unit it is, where it brings in that money from management, than it would be to sell off the Bitcoin, right? So the most likely thing that would happen, if anything had to happen, is that GBTC would be sold off whole to somebody else who can make that $300 to $500 whatever $1 million a year managing it. It's worth more money that way. Nobody wants to listen, right? Everybody, oh, it's got to go down, it's got to go down. And what happened? Boom. And everybody's talking, oh, right here, you know, oh, they're gonna sell it off, and all it did was build the bottom and break out. So again, you know, overall, we want to see this rally up to the pivot. That takes us here into this weekly gap here, right? So we'll probably see a little bit of a breakout to fill that gap, pull back toward probably this area, this high volume node here, and then go out. Let me see here. What is that? Oh yeah, look at that. That's most likely, you know, get around that pivot, pull back to this gap, get you 50 to 61.8 on that pullback, and then boom, rally up out of there. You know, again, it doesn't, too many people, especially people who are not very educated in macroeconomics and stuff like that. But, you know, you see people that are still making mistakes, right, guys? Macroeconomics is tough. It's really tough to get it right. But believe it or not, the reason I often get it right is because it stems from my belief in social mood leading to the charts, right? Most people look at the charts and say whatever's going on in the charts is going to make people do things. It's the other way around. What happens in the chart is because people are already doing things. So if we understand it from that, then we can backtrack into that macroeconomic situation and figure out what is much more likely to happen, or even a little bit more likely to happen than not. That's the secret, guys. That's why often what I'm talking about macro-wise comes out the way I'm expecting it to. But if you don't come with that background, if you don't come with that understanding, then you look at macroeconomics and you go, okay, well, here's what the big names say. Here's what's happened in this time before when this happened, you know. But macroeconomics is a lot of moving pieces, guys. And so when something is similar previously, you're often going to see something different happening another time with the same similarity leading up to it. Does that make sense? So, yeah, I mean, so, you know, we'll continue to watch and see where it goes here. But so far, so good, you know. You know, if you took it down here at $7-8, I mean, you know, you're up right now. What is that? I can't even think. What about 70% or something? I mean, just, you know, in total move off that, right? Again, if you're looking like, say, right here, right? You're about 50% from right there. Bring it down a little bit further. If you nail this lower pretty close to it, closer to that 60%, of course, getting down here, you know, gets you that 60% running there on that. But, you know, again, if we drop, I mean, big picture is if we drop below this swing low here, this pullback low at 773, you should be looking to go lower. Right now, this looks like just 3 waves up here, right? So if we're breaking out higher again, That should give us 1, 2, 3, 4, 5. And so if we got 5 waves up, then you should be looking for 3 back and 5 more up. At least that gives you an ABC up, right? Full larger correction maybe. But again, in that scenario, you don't have to know that this is absolutely the bottom. You just have to know there's that possibility, once you're getting those 5 waves up, that you've now got at least a correction going on. So you should overall be 3 waves up. The 5 is the first wave of those 3. And it's a higher high. You buy for the higher high, right? And you just keep paying attention to what goes on after that. Trading doesn't have to, I think people make trading much too complicated, guys. And it's a lot because they believe they have to, price has to do whatever they think it has to do. And a lot of times that's because, 1, people don't really understand what's going on with the markets, right, or price action. And 2, it's because they go all in. They go all in, no real risk management. And so it has to be right in order for them not to lose everything or close to everything. And so then people then hang on to what they're saying to again, to the bitter end. I'm telling you guys, most of the things that you do wrong in trading are attributed to the way in which you approach it emotionally and psychologically. Beyond that, it's about discipline and consistency. Beyond that, I mean, really, it's just about being open enough to understand that you may be wrong. There are no guarantees other than you're going to lose money at some point while you're trading. Nobody trades without losing money, okay? Now I'm over here, guys, so I got to get going. Oh, real quick. No, let me one more chart here. Man. Man, oh man, what if this is what's going on with MicroStrategy? I got to admit, I am not a fan of Homeboy there. God, I'm not a fan. But, it's hard to miss this possibility here, right? So this was his flight there at the top. We've gone over this so many times before, up there at the height of the what do you call it? The dot-com bubble, right? And his fall from grace there. And then it was like right around this time, all his competitors started rallying up. I've shown you guys that chart before, and he kind of went flat until he bought Bitcoin, and then it rallied up. But here we come back, and so yeah, it's kind of crazy potentially here, right? So what do I want to see? I mean, obviously, just in terms of what we got going here, we got this bullish divergence on the monthly. Actually, we don't, do we? Oh yeah, we do, right here. This black candle to this black candle. So they're lower lows. We got higher lows here with the oscillator. But it's iffy, right? Because we do have this area in between right here. So I'm real iffy on that. I don't really like to call that a divergence. But what am I interested in? I'm interested in impulsive breakout above the descending resistance and above the pivot that carries it above this swing high right here at 361.97. If we can get that, we should at least rally on up here toward, 735 or so. But there's a chance that bottom may be in down there, heading up higher there, right? So if we look at this, I think there's a good argument for like an ABC as a W, X, ABC as a Y. And then we got a 1, A, B, 1, 2, 3, 4, 5. So a flat correction here. So 1, 2, potentially working on a third up. So that's how I'm watching it at the moment. So we'll see if we can get that through there. Let me see. Yeah, so again, if we look here, pattern target based on the height of the channel, that's pretty close, about 250, 300% on that breakout. And so, by the way, guys, real quick here, before I go, more tips of advice here, right? If you're measuring a breakout target based on the height of a wedge or a channel, if it's correct, if that channel or that wedge is correct, then that pattern target based on the widest point of that pattern should take you to the point of, in this case, breakdown. So this is the point of breakdown here. And you can see that target, if we're to break out here pretty soon, this month or next, is going to take us right to that area. So it kind of increases confidence in the idea that if we can get that breakout, that it's likely correct and we're heading up toward that area. So yeah. Anyway, yeah. So there we go, guys. Listen, I am like really behind here, like 15 minutes beyond, and I always keep you guys long anyway. As always, I appreciate you guys checking in. We'd love to see you joining us at Texas West Capital, even if just for a month, guys. You're going to learn the proper way to use these tools. You're going to learn the proper way for risk management. You're going to learn how to properly enter, have your stop loss, and have your targets. And you're going to get so far ahead in that month than where you are right now. It costs you $19.99, guys. I honestly don't know of a better deal out there, honestly. The problem with all this free information out here that you get a lot of is most of it is a half truth or an outright lie. And even when it is, it's not that the people that are posting it generally are trying to trick you. It's just that most people don't know. And they know if they put it out there and they talk loud enough, the best marketers get the attention, guys. It's not that they're the best at what they do. They're just the best at getting the attention. So you guys got to be careful with that out there, right? What we try to do is we try to give you a real basis in what's going on. We try to explain to you why markets move the way they do, how they do, the idea of social mood and how that pushes everything. And then when it comes to actually using Elliott Wave or Wyckoff or price action, it's about the technicals in that. Like I was talking about with divergences and how to, how you should be using them correctly and stuff like that. So anyway, we'd love to have you there, guys. We've got an amazing community, I think, really just absolutely amazing. So no auto renew on that. If you guys want to join in, you don't have to worry about remembering to cancel or anything. It'll just boot you. But again, if you get in there and you decide, man, you know what, this is a great thing, I want to stay longer. We're going to offer you guys a pretty sweet deal. No aggressive selling or anything like that. You either like it or you don't. I've never been about that life, and so is what it is. But anyway, go to howtotradetowin.com/T3 and check out through some of the comments down there, some of the testimonials down there from Tier 3 members. We've got so many more. I just haven't got them all out there, unfortunately. But we'd love to have you there, all right? And join the marketbreakdown.substack.com weekly newsletter, all right? Follow me on Twitter, TX West Capital, Instagram, Texas West Capital, Facebook, Texas West Capital, YouTube, Texas West Capital, Twitch, Texas West Capital, right? You guys have an amazing week. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. And man, oh man, I guess we'll be back, We'll be back on Friday, 11 a.m. Central Standard Time. If you're in Discord, we'll see you guys over there in a bit. Take care.